Hi everyone. Today we will see how we can learn how to trade crude oil. This is our new series, what we are starting. Um, what we have seen is that there is a lot of scattered information all around internet, and when it comes to actual trading, and if someone wants to use that information for trading setup and risk management, it's of very little use. Especially for new traders, it is very tough. Even for seasoned traders, sometimes it becomes very taxing to include that information and quantify that information into their trade plan. So what we decided that we shall make a very comprehensive video, and this is the beginning of the video, and a presentation that you can later download and use as a handout on day-to-day basis to plan your trade and risk management. So we will cover all the topics one by one, so video will become very long. So my plan is to make it in various parts, and you can use it later. So by end of this video or this series, that you can able to approach all the incoming information in a very quantified format, and you can able to include all the information into your trade plan and risk management. So we will start the topics one by one. So this is one of my favorite slides. In fact, for any of the instruments that we are planning to trade, this is specifically for oil. So in 2023, it's very specific, interesting year that there is a lot of macroeconomics dynamics is happening. So especially for oil in 2023, so these are the variables affecting all the time. So at any point of time, one is dominant over other, and as a trader you should be able to quantify that, and to what extent you should change your existing trade plan or make a new trade plan and manage the risk. That's a skill. So that we will cover in later part of the presentation. So starting from inflation expectations in 2023, since inflation is very high all over, so anything that is economic data suggesting the inflation expectations among the participants or in general public, that generally affects the oil demand. For example, in US, if people are confident that inflation will come down below 2% in next couple of years, then definitely that gives optimism, and that directly links to the oil consumption and that in terms of their travel plan and other economic activities. So any inflation related reading that affects the oil price. Recession chances, if you know, all the major world banks in the in this domain, that they are increasing the interest rates, and obviously as interest rates are hiking, obviously the economic activities affect, and there are chances of recession. So technically Germany is in recession, especially it affects to all the countries, but in terms of data we have to keep eye on that if there is any signs of two consecutive negative quarterly reduction in GDP data. So that also affects. So if there is any sudden news that comes up indicating the recession, that affects the oil demand. So another thing is that central bank rate hikes. So as you know, all over 2020 to 2023, central banks were hiking interest rates. The rate at which they were hiking it was very fast, and that affects the overall economic activities, and that eventually affects the oil price. So from time to time, if there are any upcoming data release or any monetary policy decision, for example, yesterday Bank of England hiked its interest rate. So those kind of things, definitely it affects oil demand. So USD strength, so US dollar, since if you know, most of the commodities are priced in US dollars, so the dollar strength is sensitive to the central bank's hike rates, and effectively it affects the commodity prices. If there are chances that US dollar will get stronger over a period of time. That will affect the oil prices. For example, at present in Spin Global, our hypothesis is suggesting that US will end up having soft landing. Soft landing means without affecting too much of economic output, central bank has managed to keep the interest rate high throughout 2023 and 2024. So that will give boost to US dollar strength, and eventually it will affect the oil prices. Another interesting thing is another looming all is the Chinese economic prospectus. So Chinese economy has affected mainly because of its property market, and it took long for them to recover from the COVID lockdown. So if you see all the economic data, that is indicating it's a kind of sluggish Chinese economic growth, but still PBOC means their central bank and government is trying to maintain the pace of 5% GDP growth. So that's something you have to keep eye on, because oil is no doubtly it's one of the largest oil consumers, and that affects the oil prices. If there is any sudden Chinese economic data is in the queue, means obviously in that week, as a trader you have to be very sensitive and you have to be very alert in terms of your live trade plan and risk management. OPEC plus supply cuts. So obviously, as you know, OPEC is world's oil cartel, and these are oil producing countries contributing to almost 30 to 50% of overall oil production. So to maintain the price, they generally maintains the cuts, means they reduce the oil output. For example, at the end of March 2023, they decided that they will reduce the oil supply by 5 million barrels per day. So if you see on 1st of April, it was a gap up in the on the chart. So these things obviously we have to keep eye on. US weekly API inventories. So obviously US as a country, they maintain the inventory of oil and gasoline all over the country, and API, so American Petroleum Industry, if I'm right, they release the inventory data every week. So based on its prediction and inventory, if inventory falls down, obviously there will be crunch of supply, and that gives a very short term volatility of the price. So that's something, as a trader you have to keep eye on weekly basis. Generally it is released on every Wednesday. If there is a very sharp rise and drop of inventory, that gives a very fake breakouts in the oil chart. So that's something we have to keep eye on. US Iran relations. Obviously, Iran within OPEC is, I think, roughly contributing towards 10% of the production. So obviously, if as you know, Iran and US relations are a bit sour because Iran is developing its own nuclear um, enriching program, and that's US is not liking, because eventually that uranium will find its way for nuclear weapon. So so in terms of restrictions, US has kept most of the economic restrictions on Iran. Eventually one of them is that Iran cannot effectively sell their oil in return of the US dollars. So in future, if there is any signs or any prospectus of easing of US Iran relations, that will affect the oil supply within oil market, and that will give more oil supply, and that will drop the oil prices. It means if you as a trader, if one of the weeks is dominated by US Iran relations, that week you have to be very cautious about your long position. The second two items are definitely Russian supply and Ukraine war. Since the beginning of the invasion, Russia is obviously one of the biggest oil producer, and it's a part of OPEC plus. So anything that is affecting the supply, that is obviously has got implications on the oil prices. So these are all short-term hiccups, I would say. Next thing, that's something that not every time affects, but obviously once in a year, that affects is a green transition, especially around the COP or UNFCC conference, where big countries commit big funds to green transition. Obviously, if you got more money allocated for the green transition, that eventually affects the oil demand. So that's something you have to keep eye on. It's a roughly it's means we give very less weightage to green transition because it's a very long term process, and as a trader we are looking for a short term opportunities for trading. So obviously, for example, if 60 million cars on the road have to be replaced by electric cars, that will means if you Google or Chat GPT any of the prediction, that will take another 30 years. Is obviously another point is that there are a lot of legislative changes are happening. For example, 2023, Europe has made it mandatory that there will not be any new car production, petrol or diesel car production after 2023. So that kind of news affect the oil prices in a very short term. So IMF and IEA forecast of the oil demand. So IMF stands for International Monetary Fund. Their job is to predict economic forecasts. Means obviously if they are predicting that economic progress is going to pick up in next 2 or 3 years, obviously that will have direct implications on the oil demand. At the same time, IEA is an International Energy Agency. They keep eye on in terms of technologies investment in production, and if there are any big breakthrough happening in oil production or collection of oil. They also forecast the oil demand also. So obviously if there is any week where these IEA or IMF reports are dominating the news, obviously that's something that we have to consider in our trade plan. So geopolitical risk. Sorry for the typo there. It has to be geopolitical instead of geological risk. Means obviously if there are any conflict between countries which are mainly oil producing countries, obviously that affects the oil demand. So obviously these are not the full-fledged risk. Uh, Full-fledged list of the things of anything that comes up out of blue. For example, if there is any blockage of the Suez Canal, which is mainly the transport line of the global oil supply. It happens once, I think 2021 or 2022, there was one ship that stuck in the middle of the Suez Canal. So obviously that will block the whole global supply of the oil, and that will eventually affect the short-term oil demand. So obviously these are all apparent things you have to consider in your trade plan. So likewise, we will cover all the topics one by one. Other topics is like trade plan, the charts technique, risk management, and how to select brokers, and for example which are the indices, for example WTI and Brent oil. These are all things we will cover in our next slides or next discussion. For now, I think for introduction purpose, um, I'm stopping here, and I will soon upload my next discussion topic, and eventually by end of all the discussions and slide, you will have a very nice handout that you can always keep at your desk and plan your trade and risk management. So thanks for now, and I will see you in my next video. Okay, thank you.